you go live. Let me put another light on here, just so there's
Yeah, sure.
another light.
We are live in 3 seconds. Right, we are live. Okay, let's let the stream populate a little bit. Yo, what's up, guys? This is Ryan here, and welcome to the Crypto Grinder Show. Today we have Lior Gantz, and he is basically the founder of the Wealth Resource Group, a research group, sorry, the Wealth Research Group, which is also resourceful. So, Lior, please share with the audience what does the Wealth Research Group focus on, and then also how did you guys start looking into cryptocurrencies?
Um, well, first of all, thanks for being here. And uh, the Wealth Research Group started as a financial newsletter at the beginning of 2016. Um, in 2009, following the subprime crash, I went to the U.S. and I started a real estate business because America was on sale, and so that's something that has followed me my entire investing career. In 2009, I was 25, but that wasn't my first business. I had six businesses prior to that. Five of them did not take off at all and failed. And so my business experience has been to start businesses from scratch, starting at the age of 21.
Mm,
But before that, when I was 16, I got my parents' permission to start investing in stocks because I started at the age of 13 to read about investments. And so I am 33 now. In 20 years, the theme of investing and businesses has been the focal point of my life. And so, going back to the age of 21, I started my first business that was a success. And after that, the financial landscape in America was so good to start a real estate business in 2009 that I jumped on the opportunity. And between then and 2013, I built a large real estate business and sold it, and started a little fund in 2013, which was a boutique fund. There was 20 high net worth clients, and they each had to invest between 800,000 and $1 million, and had to have a net worth upwards of $10 million to be clients of the fund.
yes.
And very early, I got wind of Bitcoin. It was early 2013, and the fund invested in Bitcoin a little bit.
Mm,
Um, the price was $19 per coin back in at that time, and after we successfully sold it, I sold the fund. I closed it, basically liquidated, and I had the opportunity to say, "Hey, I want to change gears altogether, and instead of putting all my efforts, the same efforts that I do today with Wealth Research Group, instead of focusing on 20 people, let me get to a larger audience. Let me get to a mass audience who is not high net worth people. It is largely a mixed batch of people that I don't personally know, but are appreciative and looking for information about investments. And that's how Wealth Research Group, a free financial newsletter, started. And that's basically what happened. Now, it didn't start by accident at the early goings of 2016. It was because the entire world changed in December 15th, 2015, when the Fed hiked interest rates for the first time in this cycle, in this tightening cycle that we've begun after a long period of financial easing. And so Wealth Research Group started with a theme of focusing on the natural resources sector, which is always favorable on tightening periods because that means the economy is heating up, inflation is picking up, and therefore gradually hard assets take the place of tech stocks. That has not happened yet, and so we have diversified and increased our focus into other segments as well. Cryptocurrencies and cannabis being two of the main speculative focal points of Wealth Research Group on top of natural resources. So when it comes to cryptocurrencies, we've done a number of things, Ryan. First of all, we recommended to readers Ether at $12 and at $10. This has been a huge success. Dash, we were very early on to Dash. Obviously, Bitcoin, we first suggested at $400, Monero at about $10, and Steam at about 16 cents, if I'm not mistaken. Lately, the most recent cryptocurrency suggestion we had, Ryan, if you follow not the cryptocurrencies but blockchain related investments, I am a sizable shareholder of a company called Hive Blockchain Technologies, which launched on September 18th, has outperformed all of the cryptocurrencies in the world since then. In the last 2 months, gone from 74 cents Canadian, and it's a company. It's a publicly traded company that you can buy on stock exchanges and not on crypto exchanges. Started trading at 74 cents Canadian. It's a blockchain mining company, and it went all the way up to 675. So almost a 10 bagger in 2 months. It was a huge success, and currently it's trading for around $4 Canadian, and it's just increased capacity by 175%. So many exciting things going on right now, and that's kind of where Wealth Research Group is at with cryptocurrencies and blockchain. I've never covered any ICOs, nor do I plan to yet, as they are not regulated and safe enough for us to make a public suggestion. We are looking at new cryptocurrencies right now. And with regards to publicly traded companies, we are focused 100% on Hive Blockchain Technologies, just because it's the first and only legitimate company, and therefore it's a bridge between institutional investors who are looking, is traditional investors, people with brokerage accounts, with Fidelity accounts, Charles Schwab, right? You know what I mean?
Yeah, they basically have a revenue stream already. That's why they were able to confidently ICO.
It's not an ICO. It's a publicly traded company.
It's publicly traded company. Okay. It's an IPO, right?
It's not even an IPO. It's a RTO. But anyways, it started trading at September 18th, and right now it's just a common share. It's just a common stock, like you can buy Microsoft the same way you can buy Hive, and now you own a piece of the business as it matures and grows and buys more facilities. Hive, just so anyone who doesn't know it gets familiarized with it, is a hybrid between Fiore Group, which is an accomplished company in Vancouver of 30, led by a billionaire Canadian investor who started some of the biggest companies in the world with regards to precious metals and entertainment, and Genesis Mining, which is the largest private cloud mining company in the world, and they have basically joined forces to launch Hive. So Hive is using Genesis facilities, buying Genesis facilities, and becoming its only customer, hoarding the Ether that it mines or any other cryptocurrencies it chooses to mine on behalf of the shareholders. So you're basically mining, and instead of selling the cryptos, you're hoarding them for the appreciation. So it's a great way to get leverage to the blockchain sector. Obviously, you can check it out on wealthresearchgroup.com/must, which is our write-up and publication on the company, on the opportunity. And obviously, it almost traded up 10 times in like 2 months. So it's a great success up until now.
Mm-hmm. And so basically, right, the company is just basically doing straight up mining, right? And then at the same time, also, I think the unique thing is that it's already does it pay dividends? Does Hive pay dividends?
It doesn't yet, but it is part of the strategy going forward. You got to realize, Ryan, it's a company that's only been around for 2 months, so it's in hyper growth mode. Now, when you're in hyper growth mode, you do not want to pay a dividend. Why? A dividend is one of the five options that any CEO of a company, of a publicly traded company, can choose to do with profits. So when a company creates profits, create revenue, it can do five things, right? It can reinvest in the business, so buy more facilities, hire, grow internally, grow organically. It can make acquisitions, so it can buy other companies or strategic partners. It can buy back its own shares, basically creating a lesser pool of shares. Thus, every existing shareholder is owning more of the equity, more of the business, right?
Yes.
It can pay a dividend, which is basically saying, hey, here's some of the company's profits. Why don't you decide freely what you want to do with it? Here's your share. Here's your piece of the profit. And then it can store it can just hoard cash and do nothing with it at the time. Now, when you're in hyper growth mode, there are so many opportunities that you believe as a CEO that what you can do, what you can allocate the capital with, is much better than just distributing that capital back to the shareholders. Because in the traditional investment world, returns are about 6 to 7% per annum for the last 200 years. And so if you are able to grow at 20 or 30 or 40%, which is what hypergrowth companies do internally, why would you give your shareholders the opportunity to only make 7% when you can grow their money at 25%?
Sure. From a capital appreciation point of view.
Yeah, you can look at Berkshire Hathaway, the company that Warren Buffett founded. It has never paid a dividend. The idea being that Warren Buffett does not want to give you the capital because he says, hey, let me do it. I'll make better returns. You can look at other hypergrowth companies in the last 10 years, companies like Monster, beverages. It went up 100-fold, Ryan. So every dollar turned to it became $100, and they never paid a dividend because they kept growing the brand, kept putting money in there. So dividend comes at a later point, but yeah, obviously with a cloud mining business, you can escalate it to a point where profits are very predictable, and you can create a dividend stream, which is what a lot of the cannabis companies are wanting to do as well in the future.
But why of all projects did this particular project interest you in terms of becoming a seeder?
Well,
why cloud mining? I mean, just out of curiosity. What? Because I assume that they already have the mining farms and the facilities up and running, and then basically it performs as a script, and then distributed out for all the members to participate, right? So the question is, why mining when a lot of the companies are moving towards proof of stake? Do you see do you see a long-term play that as in proof of work coins are going to be here to stay? That's why you decided to invest in it, because you were in Bitcoin since 2013. Obviously, Bitcoin is the most stable in terms of proof of work is still the most stable, most secure, proven network and consensus algorithm for now. But I see that there's going to be a shift to proof of stake. So maybe you could explain a little bit about what made you made your investing decision into a project like Hive.
Well, first of all, it's very important for people to understand that they're listening to the podcast right now that there are many people who started investing for the first time with cryptocurrency. So some of the terms from the traditional investment world are not that they don't know them that much. So let me just make sure that we understand this. Cryptocurrencies are one sort of investment vehicle. And you go and you open up an exchange account, or you own a cryptocurrency. That's one thing. It's a living, breathing cryptocurrency. When you invest in a publicly traded company, you are a shareholder in a living, breathing business. And so you have it's a centralized entity. It's not a decentralized. There's a management team, there's a board. They make decisions. Now, why would you want to invest in such a thing in the first place? It's because you trust that these people are experts and they know what they're doing. They can grow a company on your behalf as a shareholder better than you can make decisions yourself, or because they have access to better deals, better capital positions, etc. So Hive was the first and only blockchain-related publicly traded company to go out there. It's
Fair
important
enough,
to
yes.
understand they had a first to market advantage 2 months ago. Right now, there are other companies that are coming to the market right now, but none are a blockchain miner, a pure blockchain miner. Now, with that said, Hive is a living, breathing business, and therefore, if it sees opportunities that it can exploit in other avenues of the blockchain profitably, it will diversify into them. In other words, if you look at companies worldwide, they do not just have one core business model that is what drives them. And just take Microsoft, for example, and see how they have evolved. And right now, people think that Office is the most important thing for Microsoft. About 20% of the revenue comes from Office. The rest comes from other revenue streams, etc. Businesses are seeking opportunities, and what you get when you invest in a business is the power of an experienced management team. So if you will, that is the beauty of it. Berkshire Hathaway, for example, is comprised of more than 75 businesses, from railroads to insurance, etc. So when you invest in Warren Buffett's company, you get to invest in 75 different industries. So just to realize, when you make investment decisions in the traditional world, what you're looking for, first of all, because it's not a decentralized environment, is who are the people behind the investment vehicle, because those are the people that will be able to grow the company in the best way. And so what Hive has is the best management team on the planet for what they're doing. The most experienced one. It's made up, as I say, of Genesis Mining, which is the best and most successful private mining company in the blockchain sector, in the cryptocurrency sector, and Fiore Group, which is a large, successful business for many decades. So it's a hybrid of both. Anyways, this just to show you how we at Wealth Research Group and how any investor should look at investing in businesses which are in early stage mode. Obviously, when you invest in Coca-Cola, you don't really care who the CEO is, right? Because the brand is what's most important. Any person with good enough skills can run a company like Coca-Cola. It simply runs itself. But when you have a hyper growth business where you have to make decisions that can make hundreds of percent return or thousands of percent return, you really want the best management teams over there. So what Hive is looking to do right now is to become the go-to company. So wherever and whatever you are looking at personally is what they're looking at as well. So they are in the same investigative mode that you're looking at the entire sector at. They are looking at the entire sector as well. They're deploying their analytical minds to make capital expenditures on behalf of shareholders. But obviously, the world is much bigger than just one company. There's many opportunities out there, Ryan.
So that being said, right, don't you find that the current ICO scene extremely messy, right? Being that there are no,
I have not put any thought into ICOs thus far.
So you have not invested in any single ICO. So
no.
Apart from Bitcoin, when you invested your initial your client's portfolio, right? Because you managed to run a small little hedge fund, and then from then you invested in. What made you invest in Bitcoin at that point? Then, that wasn't an ICO. That was literally the very beginning of the decentralized network and the blockchain. So what made you invest in Bitcoin at that point?
You got to go back to 2013, right?
Yes, correct. You got to go back to 2013 because right now your stance has changed, right? Because you invest in, I understand, right? Because tokens are not equity. Let's just be very straight up. Tokens are not equity. They do not give you a share of the company, and whatever model, whether is it DPoS, whether is it proof of work or whatnot, at the end of the day, the returns are based on the secondary market. and of course manipulation. There's no real way to kind of grow the value unless the people or the market, values it. So it's like even if the team is doing
It's
a
a
lot,
network effect.
yeah, it's like even if the team is doing a lot, it's still the people that decide. It's like,
Of
it's a
course.
chicken and egg kind of scenario. Despite the fact that the team is doing so many things, developing so many things, but where's the value? And that is the part where I've always,
You
I
are
mean, a lot
very
of people struggle.
You're
Yeah.
very much correct. There is in with any company in the world, with any business, with any living, breathing organism that is changing in value, there is an aspect of perception and marketing, which can bring a premium into a business. In other
Mm,
words, um, who can say that Bitcoin is worth such and such, whereas Dash is worth such and such? It's the market that gives value to anything, but that can be said of anything, Ryan. So, in other words, mineral water is more expensive than oil. Now, why is that? Is there any justification for that? The
mm.
market thinks there is, and
Yeah.
therefore it is. It's whatever the market thinks
Whatever is,
it,
yeah, the market is always right. As they say, the market is always right.
well, the market is not always right,
Well, the market is always
but
right, but in terms of the perception of the price is always based on the
correct,
market. You see, like for
correct.
example, we say that certain stocks are
The market is
undervalued,
always the
fair value,
consensus. Is
overvalued,
what you're,
right?
yeah, the market is always the consensus. Is
Yeah,
the right term to say it,
yeah.
because if the market was always right, there would be no way to create exceptional returns. In other words, the market is rarely right, but the market is always the consensus. Let me
Mm-hmm.
just give you an example of what I mean. Um, about a few years ago, I put money into Intel. Intel was trading at $20 per share.
Mm,
The consensus of the market was that the end of the PC era has come, and therefore Intel was trading for at a at a valuation of a company that is about to go bankrupt, and not a company that is a world dominator in the chip industry. So as you can see right now, Intel shares are trading around $45 per share. So it more than doubled since my investment. And the investment was based on the fact that the market has overreacted. The consensus that the end of PC era has come is not true. And therefore, it's a great time to be involved in Intel. The same was true of Microsoft a few years ago when I invested in it at $28. If I'm not
mm,
mistaken, it's always $70 right now. Um, the idea is that the market is the consensus. So is the market right or wrong? Is the big question whenever you see a consensus. So is the market right on Bitcoin? If it is right, then what do you do? If the consensus is that is right, what do you do? So therefore, as an investor, you always have to assume that 90% of the time, investors are wrong because that's the reality.
mm.
And because the market overshoots and undershoots most of the time, and it always seeks to revert to the equilibrium, but it rarely does. And so markets are usually either overpriced or underpriced. Um, in 2013, what appealed to me most of all was that the the potential for the network effect for Bitcoin to grow was immense. It was due to a number of factors which I believe are still intact, and therefore I see Bitcoin trading for a lot higher prices in in the near future. Excuse me. First of all, the millennial generation, Ryan, has now become the biggest generation demographically in terms of numbers in the US. Their appeal to precious metals, gold and silver, which have played the role of a what we call a zero or a asset free a risk free asset with fewer counterparty risks than other assets that are within the banking system. For millennial generation, they see cryptocurrencies as acting in the same way as the previous generations for 100, 200, and thousands of years have thought of gold and silver. So that's important. That gives a lot of network effect to Bitcoin and
Hmm.
other cryptocurrencies as well, who justify themselves, who get through the hurdles of showing that um, they have core groups of developers and miners and communities that are thinking straight. It's unhackable. All the things that have brought Bitcoin thus far, and have brought another of other cryptocurrencies to the point where they're at, and they're much more legitimate than in 2013. So the millennial gold is what I called it back in 2013. Is one thing that's important. Remember, in 2013, there was also a fiscal cliff that was on the agenda. The U.S. got rated down on a credit rating from AAA down by Moody's. There was a lot of problems in Europe, and the entire system, the entire payment system, has just survived the 2008 crisis, but was still in a situation where there was a lot of easing of monetary policy from central banks, which the world did not know how it would react to that, because that also has a network effect. If the people of every country thought that what they were doing, the central banks, was overreacting, that could have triggered runaway inflation instead of just deleveraging the system, which it successfully did. So in hindsight, we all know that it worked, right? With a lot of unintended consequences, because what central banks have done by accommodating and easing and deleveraging the system, they have fueled an opportunity gap and a wealth gap. So the world is much more de-risked than in 2008 in terms of hard debt. There's much less debt burdens than 2008. But if you take a look at the developed nations, the top 0.2%, the top 0.2%, so two people out of 1,000 now own more assets and equity than the bottom 900. The last 9 years have created a wealth gap, which is incredibly dangerous politically wise, and an opportunity gap, which is very damaging for young people. And
So, do you find
so
that the young people are being priced out at the moment? So that's why crypto is actually giving, which is why they are in crypto, right? Because I think the existing financial system is offering very little for them to participate in, if you ask me.
I
So
think I think
it's
the barrier of entry, Ryan, for young people
mm,
to high-paying jobs is very high in developed nations. In other words, if they want to participate in the high-paying industries, they have to go through college, which many of them come from families that they cannot do it. They cannot afford college tuition, and they have to basically go into um, industries which offer less of a certain future. And therefore, yes, I see an opportunity gap, I see a wealth gap, and I see record amounts of student debt. Student
yep.
loans are at a all-time high. We see a lot of consumer debt. And by the way, important to understand, the federal government will not bail out consumer debt. They will not bail out consumers who swipe their credit cards. They might help student loans. They might accommodate for that, but there's no way that they will come in and bail out $1 trillion worth of consumer debt right now, which is starting to default. We are at a very important juncture when it comes to the financial monetary system right now. After about 9 years of deleveraging the system with easing, unemployment rates are very healthy, and hiring is a very high pace in many of the developed countries. Europe is picking up, China is picking up. There is a risk that there's too much capital in the system right now, too much cash in the hands of institutions that will want to lend it, whereas pension funds are not making money in low interest rates, zero interest rate environment right now, and therefore they'll look to go into riskier assets. And I see a real potential for higher inflation rates. And therefore, I do see a case where cryptocurrencies become an inflation hedge for fiat currencies going forward. Up until now, what cryptocurrencies have basically fueled was the need to get out of the system. But right now, it's going to feel the need to stay out of the system. So cryptocurrencies are changing in terms of what they give, what they provide. Right now, they're going forward. They're going to provide an inflation hedge, whereas up until now, they provided a way to de-risk your fear of the financial system overall.
So being that we are catering to the millennials, what would be the top three, or let's say the top advice that you would give them, in order to help them out in their financial situation, being that we know that a majority of the debt, which is of course the student loans, how do you think they're going to get ahead via investing?
Well, I think it's important to understand this. Traditionally, investments are secondary wealth vehicles, which are more long term. So if you take a successful individual investor, okay, the presumable return that he or she will be able to make throughout their career is about 7% per annum. Now, that means that if you have $100,000, if you compound that over 30 years, that will meaningfully be over $1 million.
Yep.
It takes 30 years though. And therefore, and you need to reach that initial principle of 100,000.
That's right, of 100,000 first.
Yes. And therefore,
right.
For many people, investments are a secondary income vehicle and in a secondary wealth vehicle. Because people live more, you can start at the age of 20, 25 now and reach a point where you're midway through your life at around 50. And if you are able to also maintain your health, etc., you have many more years to live off of amazing income that you've accumulated over the years, because people will live 80, 90, 100 years old in our generation. That will be very common. So that retirement age of 65 will change altogether. Societies will change. There is no way that the working class of every country will facilitate the expenditures and the dependability that retirees would need, because they would need about 30 years worth of retirement expenditures for the working class to facilitate. So the entire structure, the entire social structure that we live under is going to change. The world right now, the fastest growing age group is 100 to 110 years old. It's the fastest growing age group in the world.
Okay.
Centurions. So there is no way for society to handle this kind of load. The world is changing. Governments will not be able to promise so many entitlements going forward, and they will need to handle what they were already promised and change that as well. These are not hard debts. These are promises, entitlements. So they will need to change the way that they work as well, and we'll see that in the coming years. So for millennials, it's important to understand that when they see something like cryptocurrencies, which obviously do not grow at 7% per annum, they grow at much faster rates. This is an opportunity which doesn't repeat itself. So that's important to put in your mind, the fact that you will not see another cryptocurrency-like environment perhaps for another 20, 25 years until the next major disruptive thing comes along. It just doesn't come along every too often. So it's important to understand that the entire monetary system might be changing.
But isn't it very challenging, Lior? Because when we started the stream, right, I understand that you're definitely an equity person, right? You understand, you have already substantiated why it's important to stay invested or at least be invested in stocks rather than cryptocurrencies or even ICOs. Now, because the challenging thing that when I started this channel was literally to provide life-changing income, right? And we already addressed that, right? That not many people are able to make the money that we've made. But how is it that now they are 20 to 25 years old, they have debt that they need to clear, all right? So are you saying that it's the only way that they can gradually clear their debt is, of course, through working, or if they were an entrepreneur? Right. And it's like also being an entrepreneur is not easy in this environment. Everything is so competitive. Raising funds is difficult. You have to have a workable concept and a revenue generation model. I mean, how are we gonna help? Like literally, that's the main gist of this talk. That we can help them be able to find a solution to clear their debt fast. So that's why
Well,
when you see, I can't. Okay, let's say if I was still studying, okay, and let's say I finished studying. Sorry, I have my $30,000 to $40,000 loan that I have to clear. What can I do from either a stock perspective or a crypto perspective or any kind of financial solution? Because you already did mention investing is usually secondary. But being that I have to work my ass off in a 9 to 5 job for probably an X amount of years before I can kind of clear the loan, that leaves me with practically zero to step into investing unless I'm gradually moving up the corporate ladder. But if I'm not, I'm pretty much screwed, aren't I? It's
the there are a number of points that you've raised. The most important thing to understand is that if you are in debt, then there are solutions, but you need to get creative. So many people treat debt as something that is traditional. Hey, I got into debt, I got to pay it back.
Yep.
There are companies that provide many opportunities um, to facilitate debt and ease debt load with other secondary, more creative solutions. Since I am personally not in debt, I cannot tell you which companies do that. But there are many books and many companies in the US specifically, because that's where I do most of my business, that are experts in how to spread debt, how to help ease debt, how to even erase debt. Student
I
debt in
think the
particular.
key is to erase. I mean, ease and erase, like whichever
You,
is more convenient. Yeah. Okay,
and I'm
that's good.
they are out there. There are ways to do it. There are, and you just have to get creative and investigate.
It's very frustrating because our kids, right? I mean, our kids are going to have to understand that they don't want to be in debt, but because they have to go through the education system, and if let's say for example, I as a parent do not have enough for their college funds, they have to take a loan. You see, and that's ultimately puts them into a debt that is kind
Well,
of necessary.
I
So
kind
it's
of
like,
disagree with you on that one.
okay,
Just
oh,
the word.
okay. So you got cut
Person that
off.
doesn't go to college. I'm sorry. You said have to go into debt,
Oh, fair
and
enough.
so
Yeah, yeah,
that
sure.
presumes that they have to go into college. It presumes that they have to go into college. And again, it's one way of living. I personally did not go to college, but if
Mm,
I wanted to get um, academic degrees, there are
yep.
other ways of doing it. There are other avenues of getting a college degree or an academic um, degree without going into the more expensive colleges or without even going to you can there are other ways to do it. But what's more important, I think, Ryan, for your listeners to understand, is that academic knowledge is two things. First of all, it's knowledge, and then you can do whatever you want with it. You either use it or you don't. Most of academic knowledge is not applicable to real world. It's not something that you actually apply, right? So it's more of a passport into corporate in the to the corporate world. But there are other ways of achieving your goals and getting into industries and companies that that you want to get into. And I've done so personally, so I know. And I started at the bottom as well. My father went bankrupt 3 times by the time I was 22, so I started from scratch as well. Um, the important thing to understand is this: the in any industry, what is the skills that are most important are personal skills and not how much you know about an industry. There are many people that I can sit in a room, 100 people that I can sit in a room, and I can explain everything there is to know about cryptocurrencies to them. Only about 3 or 4 of them will ever launch successful enterprises in the cryptocurrency space. So knowledge is just potential power, and what you do with it is more important. And the way that you're able to use knowledge in your life has to do with your personality. And so if millennials want, and any person, it doesn't matter if it's a millennial or not, A millennial is not a generation to be saved. It's a generation that needs to do what every person is doing in the world. It just needs to develop the right personality so it can open doors to opportunities and be ready to exploit opportunities. Some people exploit opportunities as investors. They have great skills at being early to situations. Other people have developed skills to run businesses. So that's what they're good at. Other people have other skills. You need to go where your natural skills are best. This is the path of least resistance. You need to understand what your strengths are. Discard your weaknesses altogether. You don't need to care about your weaknesses. Anything that you're weak at, you just have somebody else do. Okay, this is very different than how people grow up. People grow up with a parent that if something is weak, or we get taught at schools that if you're weak at something, you need to really work on it, and it's really untrue in the business world. I am very weak at many aspects of business, and therefore I don't do them. I really don't. If you were my host, you were my guest, which was done 3 weeks ago, where you were a guest on my show. I record the show, but we have editors and video people that actually do all the other stuff. I don't do them because I can't do them. Okay.
Yep.
But the fact that I can't do them doesn't mean that I can't have a YouTube channel.
That's right.
You understand?
It's all about leverage.
It's all about delegation, leverage, and just understanding this. The idea is this.
But what if we're broke? We just started out, we're all alone. So that's why the development of the skill set is very important, right?
Sure. And I was about to get to that.
Yeah.
People that are broke need to understand that the world's most important skill for broke people has always been to know how to sell. If you can market and sell,
learn how to sell, guys.
Would hire you no matter how broke you are. If you can sell, this is a passport to any company in the world. Now, you may have to get creative. I can tell you that one of my first jobs was at the age of 14 at a clothing store. And so I got to a point 2 months after working there where I was running the monthly newsletter. The monthly newspaper ad for them. I designed it with the graphic designer, and it's just because he said, "Look, you know what to sell," and so learning how to sell is a really great way to get ahead in the world, no matter in what industry you're in. And so, how did I get that job? I came into the store every day, and I started going over with the salesman, started going over with the owner, started going over all the shelves. And I told him, "Hey, why do you put this there?" I was a customer, came in as a customer. I just offered, just talk to him about it for like 30 minutes to an hour every day for about 2 weeks. And then he said, "Hey, why don't you work here?" So that's how I got my first job at 14. I started babysitting at the age of 14, and then I had babysitter working under me by the time I was 15, because there was the word to mouth in the neighborhood was spreading, and I couldn't be at all places at the same time. So that's how I started my own little private business, the first one, and hiring out other babysitters. And so, Ryan, it's very important to understand your ability to communicate and sell and market, understand what people want is a really great tool. And the way you do that is you really need to become familiarized with how to handle other people. And I think this is what academia doesn't teach you. No one goes into that in depth. And I learned it through two things: experience. So I saw how people react to how I speak. I saw their tone of voice change, or their facial expressions, etc. So just real life experience. And then I realized if I'm doing something wrong or right, if I get a smile, or if I get a turn, if they turn away, etc. And it's just very important to put yourself out in situations where you can grow in these ways. But also books, great.
Any books? Any particular books? Which books?
Well, the two books that have made the most impact on my life are called Think and Grow Rich from Napoleon Hill.
I've read
I
that.
know if you read it, I suggest reading it about every 2-3 months,
Hmm.
because you change. The book does, but you change, and therefore the lessons are very much different every time.
That's right.
And each time you understand the importance of another thing, um, and therefore it's important. The other book from Napoleon Hill that I recommend is called The 17 Keys of Success. And I'll tell you just a little bit about the difference between them. Think and Grow Rich is a book about how to get financially rich. And the 17 Principles of Success is how to have an all around great life. The research that he put together for both books was different. For 25 years, he interviewed the magnates of industry in order to create Think and Grow Rich. But he realized that some of them are very annoying, disgusting people that, though they were, it's true, though they were, in his opinion, I mean, that was his consensus. And so he thought that Henry Ford, for example, was stubborn and you can't deal with him. Other people like Gillette or the guy who started Kodak, Eastman, he found them to be unbearable in personal relationships. So another book was just on how to have a great life,
Mm.
and I think that's important. The 17 principles of success. And so these two have really formed the principles by which I live or try to live, right? Because we all have habits that we need to just work on. Um, it, in terms of opportunity, Ryan, I think the millennials have entered a world where debt is a problem. It is a problem. You cannot ignore the fact that the system that we live under has created a debt balloon, um, driven by previous generations, and it's an insider's game. If you have access to debt, to cheap debt, you can move ahead in the world faster than if you don't, which is what you're saying, basically. Because if you had zero interest rate on your student loan, then maybe it justifies the investment, right? Maybe there's a return on investment. If you say, hey, if it only cost me such and such to do a college degree, and in the first 4 years of my corporate world I do such and such, it may have been worth it. But it's not worth it because the wages are stagnant and college tuition is very high. And so it's a game
I
that
have a
is
scenario. I have a scenario. Say I'm still studying. All right. I know that my parents are working really hard, or they may not be working at all, and I would like to clear my debt as quickly as possible. But I probably want to start a business with less than $1,000. What do you
okay.
think in this current what do you think that the millennial or the student can do while he's studying, be able to establish that,
Sure.
and clear off that loan, because that's the only thing that I hope we can give to these people before we go.
Again, Ryan, in terms of debt load, you need to figure out ways and creative ways to get out of debt, and you should Google, you know, these terms on how to
Mm,
get out of debt, um, and special ways, and seek out experts. It's important that you do that because there are solutions. If there's a market for it, a huge market for it, there are companies that are handling these solutions for you. On the other side of it, my success after 5 failed businesses in the early goings of my life, the sixth business and there onwards, because I've from there on I've started 4 other businesses. Now I own 4 businesses that are running at the same time. I'm sorry, 5 businesses that are running at the same time. And what's been my success has been partnering up. Partnering up makes all the difference between what I think is a failed career in entrepreneurship and between a winning career in entrepreneurship. Every person in the world that has made significant long term success without catastrophic setbacks has had partners. Da Vinci had partners, and he was a painter and a sculptor. So realize that the singers have partners. They have vocal coaches that which are like their partners. They have songwriters which are like their partners. It's important to understand you need to have this close mastermind group that you work with, and which is your core group, your partners, your core group that you develop together. You share the same passion and you grow together. And I think that's everything I have to say on all of these topics.
Thank you very much, Lior. Right, guys. So we have basically given you the best kinds of solutions that we can come up with. So the key takeaways are, of course, to partner up, look for, mastermind groups. Always make sure that you are able to manage those risks. And also, naturally, I think if you have good debt and credit management, I think that will actually take you quite a bit. So, if you are in debt as a student, try to spend less, especially, don't buy unnecessary miscellaneous stuff. I think that's one very important thing that the young tend to always do. They overspend. But if they don't, try to get creative, like what Leo has mentioned, go in Google stuff, start to read more books on entrepreneurship. And yeah, I think these are one of the ways, or at least the few ways. Leo, thank you very much for coming onto the show.
Thank you very much for having me.
All right. Well, guys, Ryan signing off.